Does the feeling of being ripped off make you as irate as it does me? It's not always overt, but that nagging feeling that the cost-benefit of what you are paying for just does not make sense. It starts with the thought, is this still worthwhile, or am I throwing good money after bad? That is exactly what happened to me recently, and it forced me to question a financial decision I made blindly every single month for 40 years. Welcome to Silver Fox Insights, where we simplify investing, markets, and wealth building with clarity, not complexity, and understanding before action. In this video, I will be dissecting whether the cost-benefit of life insurance is worthwhile and providing a possible alternative. Having that nagging feeling every time I receive the annual policy renewal notice. Despite being a certified risk manager and spending 30 years in financial markets, I believe the multi-generational adage that life insurance is an aspect of life that you must never neglect. I am sure you have been told, think of your family. You need to forego some of life's simple pleasures for an undeniably no-option necessity. I swallowed this hook, line, and sinker. So why, if life insurance is such an important necessity that any self-respecting adult would surely always have, would I question it? I was young, in a high-paying industry, had a company car, an expense card, cash on the hip, and virtually no debt. Thus, paying a monthly premium was of little concern to me, and I rarely even thought about it. It took me 40 years of paying my monthly contributions to realize that something was amiss. Firstly, tales abound about headaches being caused for a deceased person's loved ones, and in some cases no payment at all, due to some technicality, despite premiums being paid for decades. Secondly, is the product fundamentally designed to be canceled before it ever has to pay out a claim? Fear is the notable answer. Fear of not providing adequately for our families should something untoward happen to us. This is exactly what I see as the modus operandi behind life insurance. Do we even know what it actually states in the fine print in our policies? Unfortunately, you cannot always take the consultant's word at face value. However, this was not the reason for me looking into life insurance closely. So what was it that peeved me off? As mentioned, I had diligently been paying the monthly premium for decades. Escalations were regularly higher than inflation, and that suited me. Believing the jargon that a young man with too much cash on hand readily accepted without giving it a second thought. A modest benefit escalation designed to be slightly higher than inflation evidently accounted for that. It was something that came off my bank balance every month. So what? After all, it's the right thing to do. However, once I reached my early 50s, I started to notice the changes. This still did not affect me, and I kept paying the increasing premium diligently, as I had been taught to. 10 years later, with premiums escalating regularly at up to 8 times the inflation rate, I started to question whether it was still worthwhile. I dismissed it again as one of life's necessities. However, 2 years later, I decided to do the math myself, because the costs seemed to be getting completely out of control. It forced me to ask a fundamental question. How is anybody supposed to afford this in retirement? To be clear, I fully understand that mortality rates increase as we age. But that's not the point of this video. The real issue is the hidden trap of long-term affordability. That is the structural reality that insurance consultants completely gloss over or completely ignore with sugar-coated promises and fear-mongering. To be fully transparent, the specific numbers and increments I am about to show you are based entirely on my own policy portfolio with a global giant. While the general pricing trend is an industry-wide reality, your exact math will vary based on your age and history. So, what did the math actually reveal? When you are earning $12,000 per month, and life insurance costs you just $144 per month for $500,000 of life and disability cover, you don't give it a second glance. It feels like a drop in the ocean. The premium automatically leaves your account, month after month, year after year, decade after decade. Once retired, monthly premiums of $1,546 per month, rising dramatically annually, and you don't have a regular salary coming in. It can quickly become a cost-to-benefit nightmare. Doing the math out 20 years explains exactly what I see is going on behind the scenes. The data is based off an actual portfolio of an individual who had no chronic medical conditions over his lifetime. The actual values have been rounded for ease of comparison. Let's get stuck in and be prepared to be astounded. This table reflects the actual monthly payments from mid-2014 to mid-2026. It relates to roughly 22% average annual increases. Extrapolating this for 20 years into the future, without accommodating for likely further annual percentage increases as you age, I would be paying $82,491 per month at the end of the 20th year. Yes, you heard correct. $82,491 per month. Over the past decade, the average increase is higher at 23.40%. This would push the monthly premium to a staggering $103,636 per month by the end of the 20th year. Now you may be thinking, what about wage growth? Well, wage increases are generally linked to inflation. If you do the math based on CPI using the same input data, the monthly premium in 20 years' time would only be $2,738 in my home country, or $2,977 per month in the U.S. So, what's the alternative to paying $82,491 in monthly premiums? Instead of outsourcing the risk, possibly follow the self-insurance route through investment. This translates to purchasing term insurance and funding your own independence. Doing the math, commencing the investment at the current $1,546 at the beginning of each month, in line with insurance premiums, at a 10% diversified stock market index annual return, results in a tidy sum of $1,183,767 after 20 years. If one had to emulate the insurance escalation scenario into a stock index portfolio, this value would balloon to $6,635,350. However, realism dictates that you probably wouldn't be able to afford the $82,491 monthly investment at the end of the 20th year. It was included for comparative reasons to illustrate the astronomical opportunity cost. The question to ask yourself in coming to your decision is, are you really protecting your family, or merely wiping out generational wealth by diligently paying into a protection plan that eventually becomes impossible to maintain? You will probably be forced to cancel the policy, leaving your family with nothing, due to the exorbitant premium escalation later in life. This led me to question whether the system is fundamentally flawed. No, it's basically that the product is designed to be canceled before it ever has to pay out a claim. The insurance company's pricing model is simply completely detached from human reality. There is obviously a major trade-off here. The question that comes to mind is, what if I were to pass away tomorrow? That is exactly the fear-mongering the industry relies on. However, it remains a valid question. You ultimately face a choice between taking on a calculated risk in the short term while you are young and healthy, or do you accept a system that is geared to collapsing affordability in old age, leaving you with absolutely nothing to show for decades of payments? I want to be absolutely clear that this expose in no way insinuates that you should not take out life cover. This is simply an alternative perspective on what really goes on behind the scenes, based on my own experience. Every person's circumstances are unique. Therefore, consulting a qualified professional to discuss your specific situation is always the prudent approach. What I intended to expose here is a much larger truth about how we perceive risk. It forces us to ask whether we are actually managing our future or just placing an expensive bet that we won't be able to afford later in life. Which brings me to a question I want to explore next. Where is the actual line between gambling and investing when it comes to growing your wealth? We will dive into that in my next video. This is Silver Fox Insights, where smart investing starts with patience, discipline, and perspective. Till next time, a vulture is a patient bird.